Hi everyone, and thanks for checking out my channel. I'm going to have a look now at natural gas, look at what happened last week, and have a look at what could be the plan for next week. Having a look at what happened last week, so again, don't have the court report and the data yet, but of course we had that big gap at the open on Monday, so my plan here was to short continuation of the downtrend on that level. Of course, when we got at 160, we got that massive candle breaking higher, so no way to short this, so I didn't enter any short position until we actually reached here, when we had a nice 1 hour divergence that was very obvious between 172 and 176, so that was a perfect entry. I left that trade running, but closed pretty much break-even on Friday on a sign that basically we could not get any follow-through yet, and I didn't want to stay exposed to any news about the weather over the weekend or something like that and get a gap up at the open on Monday that I couldn't actually exit. So yeah, closed that trade. Break-even was a bit of a shame. It was nicely in profit at the bottom at 1.67, but yeah, sometimes letting the trade run is not the most efficient thing, but sometimes when you miss a massive move after this, of course they regret you took profit and everything. So made a decision and ended break-even on what could have been a nice move. Now looking ahead, we got many things the week coming, so there's a lot to say about this move here. Either this is the start of a massive rally for natural gas, or is it just a spike on some speculation about production to reduce due to bankruptcies and things like this. Really hard to say. We're also having the weather supporting for the next 2 weeks, so having a look at the bullish argument, I'm having a little bit less bearish bias for the week coming, mainly for some reason that's quite new. First, we're having a lower injection. That's been, I think, the first time for quite a long time, and 9 BCF a day under the forecast, which is quite significant. Of course, we're still running at low rig count, but that's unlikely to keep going down now, so I think we reached the floor on this. And as I mentioned, we're having an above average temperature forecast for the first half of July. So 2 weeks now of supporting weather that cannot be ignored, because that has, of course, a major impact on natural gas. Another bullish argument is that the spread is getting under control and the contango is sitting at 3% now. August, September, and September, October is under or slightly above 5, I think, which is reasonable and not too high, so that should not actually add massive pressure should the spread stay like this. Of course, we don't know this, but yes, that's definitely something to keep in mind. One thing also that is notable following last week is that we have some sort of a weekly divergence, so a bit tricky because I think the chart is not entirely correct, so it's a bit misleading, but still we can see here that from that point here and even there we had the first divergence set here and then continuing here on that move. Doesn't mean it cannot actually move lower, but it could actually point to potential end of the trend. It's also showing here on the daily chart, but again, keeping in mind that that level is wrong. It stopped actually at 152, so it's actually not a lower low, strictly speaking. So just technically the divergence not actually working when we don't actually set new lower low, but still that's something I need to keep in mind. Also, we had that trend line that got broken here, also something that could actually be some yeah, the start of some more major move to the upside, so careful with short position, definitely. I'm still not bullish on natural gas. I don't believe this is the right level to enter long. This is too risky, but should we have some breakouts above, say, that level here, 180, then it could become interesting. We would set some sort of a higher high on the low time frame, and that could start to be interesting to trade. Now looking at the bearish argument and why I'm still looking at the last leg down before we bounce, the diamond is still down, only 3 BCF down to the normal diamond we're having, so it's not significantly lower. And again, we can see from all these figures, 9, we're having LNG export down to 3, that we're playing with a very small variation between forecast and actual, so it can go both ways really quickly should we have any switch in the say the weather or the production, since the production is ramping up a little bit, 2 BCF per day more from the week before, so that's significant, and that's going with the oil producer ramping up production as we are setting about 40 to increase revenue, so that could put pressure onto the price definitely. Also technically, we're having solid resistance just above that area, as you can see. That trend line got broken, but still, when we look at the 4 hours, we're having the 200 MA running here, that's significant. And when we move up to the daily chart, we have the 50 MA running at 176, so not necessarily, as we can see previously, it did break easily up and down, so not necessarily capping the price too much, but still need to keep that in mind. The 200 400 MA is actually quite efficient, and it's been capping the price since we dropped underneath. That was about a good month ago, so it will not break that easily. Also, we're still having that 1 hour divergence, and more annoying for the bullish scenario is that gap here that is still open. So on the 1 hour we're having a clear divergence, so it doesn't actually show here, but usually when clearing divergence you take the first peak and you look at the bottom here to clearance, so 160 should be the target, but we didn't get there, so I'm still concerned to leave that open. And of course we're still having down here that gap that showed last week, it's quite obvious. That's a problem. When we look at the 4 hours here, I don't believe we have one single example of a gap that's never been closed, so we're having that one. Took quite a while to close, but it did. Again, when we look at that one here, that one was a gap down, so that's not valid. Looking at gap up, that one here as well got closed as well. We had that gap here closing also, and yeah, I just simply have no example of a gap on the 4 hours that's never been actually filled in. So the problem with that scenario is that surely it can close later, but we are running into summer quite far now. We are entering potentially tropical storm period as well, so there will be some bullish arguments that will actually prevent the price to move much lower. Should that be the case, then it will have to fill quite quickly, and this is why, in my opinion, we are going to go down before we actually going to move up. Also, we are having still a continuous falling open interest. We could see on the CME group data. That's definitely pointing for continuation of that move, especially with that kind of candle with falling open interest. It's not a good sign. So my scenario for next week will be there. I'll be trading only one kind of plan, and it will be bearish. I will keep for now the bullish scenario at bay, but keeping it in mind for medium term and going for bearish short term. I believe that's probably what will work best. Short entry, should we reject on 178? Should we is very important, because of course if there's no rejection there's no short entry. I would have 154 target price with stop loss above 180, potentially 85, but it would depend. If the price action is very solidly bullish, then probably best to get the stop loss a bit lower. So it would look something like this. If we take that to the chart from there, so potentially a small continuation on the move to 178, and then we would get some drop here. That trend line here will act as a magnet target bounce here, and then we would break and close the gap and final touch on 150 to 153. So that would be the plan for next week, and I will be definitely looking at this. That's a quite safe short entry, of course depending on the price action, but we could set the stop loss not too far away, but the target price for that drop is quite significant, and we have a bit of room to move above until we trigger any stop loss, so that's quite comfortable on this. Now, mentioning the bullish scenario, not trading it short term, but now I think we could start considering long entry to trade some summer rally on natural gas, and I'll be waiting on that level 154. Should we break much higher and get up to 185, that's going to be major resistance. Potentially long entry could be made on the pullback at that level, something like this. Accumulating here, breakdown, and re-entering at 178. So there's definitely no rush to enter long here. Too risky because I think the downside is significant. Are we going to break 150? Should we go there? It looks a little bit less likely than what I've put the last weekend, but still it can happen. So careful with this, but at least at that level, entering long, we could set the stop loss not too far away. Less risky trade, in my opinion. So yeah, that's about it for natural gas. Hope you take something out of that video. Now we are trading at very low levels, so of course short position must be managed carefully. Stop loss always in place, position size reasonable, so in case it goes opposite your trade, it doesn't actually trigger huge losses, and yeah, it should be interesting. I hope you enjoyed the video. Wish you safe trading, and I speak to you soon. Cheers, bye.